G'day traders, 1 minute mindset reset. Today talking about trading 1 hour a day or per session. So I received quite a few emails. We had massive moves yesterday, indexes, currencies, gold, first red day on Monday on gold, pump and dump from Friday's low, and a lot of traders still trading and asking me about, for example, RBA, what I thought I was going to do after RBA. And I think a lot of people are missing some key important concepts here. I'm going to the screen the first hour of those sessions, Asia, London, New York. I'm letting the market put in a high or a low, or both. But I have a thesis. If there's a setup, it has to have a setup. Now, when that market trades, I'm trading that middle hour. Now, obviously, you get a large move, first red day, 3-day setup. You're going to be in that trade possibly longer than 1 hour. But that's because you're in the money. You're in the money. You're in the money for 3 hours. You're not sitting there nursing a trade. You're in the money. If you're not in the money in the first 15 minutes, there's a problem. So one of the other things I keep coming back to is that if you're taking trades and you're trading all these different moves, trying to catch the high, catch the low, trade this, trade that, what are those setups? What are the names of them? Are they duplicatable? Can you reproduce them? Here's what you can reproduce: the time of day, the 100 pip boxes, whether or not you have a setup. Just taking a trade does not mean there's a setup. So you need to understand the difference between when there's a setup versus and what type of price action is tradable. So for example, some traders went long later in the US session on the indexes, but the moves down were sizable. The moves down were sizable. They were collapsing. The moves back up were trading ranges, back and forth, back and forth, back and forth, grinding back up. You can take them as trades, but they're not sizable. So understand the difference between the setups that are scalable and sizable at very specific times. First hour puts a high and a low, and if you're trading in the first hour, okay, expect either that you're going to have heat or you're caught in the wrong direction. The second hour, London Open, New York Open, that's when the market's going to move. So again, somebody said to me yesterday, why didn't you sell it at the high? Because I sold it at the open of the London. Because when I sold it at the open of London, the trade is about to accelerate. If you sell it at the high, you don't even know if the high's locked in yet. So these are some simple things you need to really understand. If you're struggling, if you're not consistent, pick 1 hour in the middle. Stick to that. Stick to 1 hour. When you have profits, when you're profitable, lock it in, get off the screen. Understand about how to scale your trades up in size, not just keep trading and getting pips. Pips aren't scalable. Trade setups are. So hopefully that makes sense. It's Wednesday. We have had monster moves. First red day, 3 levels of rise. We've had low-hanging fruit trades. We've seen it all in 2 days. So we've still got 3 more days. Keep it simple. Focus on what's duplicatable, reproducible, scalable. When you're done, get off the screen. Have a great session, and may the markets go with you.